Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up in their names, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back, knowing that it's...
Hey, to my success-driven millionaires and billionaires, we have no choice but to be successful. And so today I'm going to go over certain strategies and just give you a risk assessment of what it is that you might actually want to do and get into. So growing up in New York City, a lot of people rented houses around my area, rented apartments, and I've even dated people where their mothers were saying things like they're going to rent for the rest of their lives and they have no interest in owning anything. And that is absolutely okay. But I want to tell you what the positives and negatives are of those things, because you'll see people say, is getting a mortgage a good option, or is renting a good option versus buying? And it's all going to be subjective. It's all going to be based on a myriad of things. Now, I'm going to start with housing, and this is going to be an in-depth discussion so that you are aware and you understand the type of value or the type of investment or the type of living situation you're going to be in. So if you are buying a primary residence, it is not an investment. It is not an investment. For the most part, most people are not going to be able to utilize their primary residence as an investment. Now, as for myself, my primary residence is an investment for now until it's not, right? And what do I mean by that? So currently, every single room in my home is rented out, including the basement that I just finished literally a few days ago. I spent over $20,000 upgrading my basement, and I was able to get $1,000 a month for that space. So it would take me less than 2 years to recoup that money. However, for the majority of people, it is not an investment, right? You upgrade, you do all these things. But I did all these things with the understanding that if I did not want additional roommates, if I did not want additional people in my space, I would still enjoy that space and still be happy for that space because it is my home, right? And so for me, again, not everything is to be looked at as investment, but if you can capitalize on it as a single young individual, then there's no reason not to. And so that's exactly what I did. And that's going to open a lot more floodgates for me, because now as I'm making an extra $1,000 every single month, that's going to lead to opportunities where my net worth, not my net worth necessarily, but my income is greater. And so then I can go ahead and afford more things. We don't really like to use the word afford, so I'll say buy, purchase, and invest in more things. And so since I purchased real estate, it's always been an investment because it's cash flowed for me. But we all know what happens when you settle down. When you settle down, you tend to remove roommates from the equation. You tend to remove anything that would make your significant other uncomfortable, and that's going to lead to a decrease in income for an investor like myself. And so when that income is decreased, this is no longer an asset, it becomes a liability. And the liability is when you are paying for said thing out of your own pocket, your own funds, and it is not making you a return, it is not making you money. Now, another thing that I want to take into consideration is that I bought these properties at under 3% interest rates. There are still ways to get 3% interest rates even in today's market. One of them is an assumable loan. And there's other ways of getting appreciation through forced appreciation, like rehabbing a property or even getting a FHA 203K loan to do a rehab, right? So there are ways to go ahead and make money back. But I want you to also understand that if you have a 4.5% interest rate, which it is not right now, is above 6%. If you have a 4.5% interest rate over a 30-year period, you're going to pay double for your home. So if you have a $600,000 house at 4.5%, over 30 years, you're going to pay $1.2 million. And that's just with principal and interest. Understand that there are other costs associated with home ownership that will occur over a 30-year period of time, like repairs and cost and maintenance. All that stuff comes into play, right? So understand that a house typically appreciates and doubles after 20 years. So if you had a house at 4.5% interest rate, you know that you're going to make your money back in a 20-year period of time. And then that extra 10 years that you're paying it off is actually, basically offset by the appreciation. Your house should be worth 1.2 million in 20 years, and yet you've only paid 1.2 million for it after 30 years. So that's a really good deal. But at 6.5% or 6.7%, you're paying 3 times more for the home. And so it cannot appreciate enough for you to have covered that cost. It is an extreme liability. Now, one thing that you can do, even at 6.5%, is look for value in your properties, because that is the only way to almost ensure that after a 30-year period of time, if you even hold it that long, that you make money. And what do I mean by that? Using today's money is going to be the cheapest because of inflation. It doesn't matter if interest rates are 1%, it's still cheaper today than it will be tomorrow, right? And so if you are investing, let's say, $200,000 into a property that you already have today, it is going to be worth so much more 20, 30 years down the line, to where you might be able to make up for that 6.5 to 7% interest rate that you're currently paying on, right? So the $20,000 that I invested in the basement today was supposed to be $30,000. I did a lot of the legwork myself. And so I've already seen an appreciation of $80,000 in the home by making a $20,000 investment, right? And so when people talk about investing, you have to understand that there are several ways to invest, to where not only am I making money from the rent now, $1,000 a month on just that alone, but I've also made $80,000 in appreciation on top of the 20 that I've invested into it. That is astounding. And where I live, if I were to sell this home today, I could really just buy a house free and clear. But again, this is a moneymaker, it's producing. And so there's no reason for me to even look at that option, right? Maybe if I was hurt, injured, and didn't want to struggle with paying bills and doing things like that, then I could look at a situation like that. But again, it's not necessary for my situation. And ever since I started purchasing real estate outside of upgrades and literally buying properties, a mortgage is not my concern. It is the concern of the tenants in which I lease out to, that I provide adequate living and resources. And I do upgrade the properties as well in order to ensure that I am probably the most modern in the market. And so now moving on, there's a lot of reasons why you would not want to get into real estate. And that's going to be because of the upkeep, the cost. It requires a sense of discipline, right? You have to be financially disciplined. You cannot just go month to month making a few dollars here and there and assume that you're going to be able to keep up with a $5,000 repair when something happens. My toilet pipe bursted the other day, and that was going to be a $5,000 repair. But luckily, I had just bought a $300 dehumidifier that I was able to leave overnight downstairs to suck up all the water that seeped into my basement, which I was just renovating. And then after it did its job, I brought it upstairs into my bathroom in order to dry that entire thing out. That $5,000 repair, I then paid $200 for a toilet to be reinstalled and a new pipe to be put in, a new line to be put in. But I had already purchased that toilet because I was already doing upgrades downstairs. I wanted a new toilet in my bathroom. So guess what? The toilet was already there to be installed, and I just paid $200 for the labor. So now I got my new toilet installed. My house is dry, no mold, because I cleared all the humidity, and it was a really, really good dehumidifier. If anybody knows, if you're spending $300, $400 on a dehumidifier, it's going to do about 1,400 square feet of living space, 50 pints of water it will hold as well. And so really, really great dehumidifier. Completely dried out the place, no mold, looks fantastic. I spent less than $500. But if you're not savvy, if you're not looking around for certain things, if you're not trying your best to stay on top of things, man, things will break. And mind you, that was on the day after Christmas. I was actually supposed to sleep over at my uncle's house. So if I had slept over at my uncle's house, my house would have been flooded. Flooded, people. Can you imagine just that one decision to just say, let me go home tonight? Saved me so much money. Saved me at $5,000. And so with that being said, real estate can be a painstaking business. And so what is your alternative option? One of my favorites, the stock market. Now, the stock market is essentially, you're looking at different companies. You're looking at companies in which I like to say, you buy these companies. So if you have an iPhone, you like Apple, you will always be an Apple user, then guess what? You should probably buy some Apple stock. You like Nike, you should probably buy some Nike stock. Now, you watched my video on why I sold my Nike stock, then you'll understand why I don't have any Nike stock at this time. And then maybe we might look at Nike in a few months or so and then reevaluate our position and whether or not I want to buy that again. But again, I am not your financial advisor. I'm just an average guy on YouTube. I do want to make that very clear. I do show my stock market portfolio online from time to time, and you can always take a look at previous videos in order to see what I have in my portfolio. What I like about the stock market is that these are actual companies. People talk about tangible assets. To me, this is very much so tangible. I can walk into an Apple store. I can walk into a McDonald's. These are all companies that I invest in. I can go on Google online, and that is also a company that I invest in, right? And so because of that, I see the value in me using these services even more, because I also know that I am getting paid from these services as well. And so when I'm getting paid from the services that I am utilizing, I feel so much better about everything that I do throughout life. There is nothing that I do in this life that I am not benefiting from. Whether it's, okay, I got an Ioniq 5, maybe I should invest in Honda stock because I believe in the company, I believe in the direction in which they're going, I believe in this and that. Let's go ahead and take a look at Honda, because I do have an Ioniq 5, as everyone knows. And let's see if their stock is doing any good. How about that? So this is how I really research companies. If I got it, if I like it, if I use it, it may be beneficial for me to have. So in the last year, the stock is currently at $54 at the time of me making this video. In the past year, it has gone up 30.43%. All right, it went up $12.60. So imagine putting $1,000 in the market, and now you have $1,300 in a year, right? All you had to do was look at the company, say, this is something that I want to invest in. You like it, you use it, you look at their financials. It's been as high as $69. It's been as low as $40. So it's actually towards the lower end than the high. I like that, because that means people are looking at this company and it had the potential to be upwards of $70. So there's a lot of room for growth, and it's still up 30% on the year. That is very important to me in the last 52 weeks. It doesn't look like this company pays a dividend. And you know me, I'm a dividend growth investor. Over the last 5 years, it has been up 67.18%. So if you had $1,000 over a 5-year period of time, that would be up 67.18%. And all throughout its life, since the inception of Hyundai back in a little before 2010, it is up 743.75%. All right. So we're talking about a stock that was under $6 is now $54. And a stock that in 2014 was $77 and has not quite reached that point yet. And so that makes me start to wonder. In 2014, it was at $77, and the highest has been since then is about $69 just so recently. That makes you start to question the stock. So over a decade, it has not amassed $70 in net worth. I mean, in worth. But definitely room to grow. I would say the bottom for this stock at this time is about $17.14. That was the lowest it's been, which was in 2020 during the pandemic year. Since then, the lowest I've seen in 2022 is $27.50. That's still double where it's at today. And so I would have to do a lot more research on Honda Motors, but I definitely do believe that there's a lot of room for growth. It really just depends on if you believe in this company, you believe in their vision, and you like where they're going. And so that's the only thing that I would have to look at outside of the fact that they don't have a dividend. So I'm probably not going to invest in this company. Is their future? What is their vision for the future? And so, yes, it does take work to understand what a company is going through, what a company is pivoting towards, and what a company is doing. And their CEO does matter, right? A lot of people will invest in a company just because Elon Musk has his name attached to it, because they believe in the CEO and they know that this person has a bright vision for the future. Whereas they may not invest with Warren Buffett if he was the CEO of another company outside of Berkshire Hathaway. Now, reasons vary from person to person, but again, this is just an example. So for me, I always like McDonald's because they're dynamic, they're always changing, they're adapting with the times, they're understanding food costs, they're understanding prices, location is everything, and it absolutely makes sense. A lot of people have stated that McDonald's is in the real estate business and really not in the fast food business. And it is very apparent that you will always see a McDonald's logo big and bright. You understand what it means, you understand what it symbolizes, and it's always visible when you need it most, when you're hungry, right? And so I absolutely love the stock market because I can sit down from the comfort of my home. I can look at my laptop or my phone. I can see what is going on, their earnings reports, their statements, how much profit are they making, how much are they losing, what are they looking to do with the future, do I like the company, do I invest in the company? All these things are important to me, and it allows me to make quick, sound, and easy decisions. Now, Hyundai was a company that was up 30%, but also paying a 2% dividend. It would be more so interesting to me because now I'm also getting a cash flow from it while it's appreciating in value. But because it doesn't offer a dividend, it's a non-starter for me. But it doesn't mean that you still can't look at their financials and look at what they're wanting to do and say, you know what, this is a company for me. I like Honda. I invest. I buy Hyundai, and you know, I like their future, right? So if that's you, then you can definitely look into that company. But yeah, is buying a house everything? Absolutely not. But it can be a benefit to you. It can be a sense of security for you. And then also knowing that you're essentially getting rid of a mortgage, paying it down, or just getting rid of payments completely is also a nice thing, that a nice little thing. If you do get to a point where you're renting and you're just paying the whole year up front, kudos to you, so you can focus on life. But for the majority of people, they are living month to month and they need to get out the rat race. So saving up some money for a down payment, having some stability and some structure in your life. I'm not going to say that that's for everybody. Some people like the hustle and bustle. I am from New York, so I completely understand. But for the most part, you want a place where you can hunker down and call your own, a place where you can ease your mind and get back out there. So if you like this video, make sure you leave a like, comment, and subscribe to the channel. And I will see you on the next one. Peace.